Now, all week, we're getting you ready for the new year by bringing back some familiar Market Monitor guests. And tonight's guest is buying some growth names heading into 2020. Last time he was with us in August, he recommended Lowe's, which is up 11% since that time, Nice Systems up 2%, and Yelp, a 4% gainer since that time. We welcome back Richard Steinberg, the Chief Market Strategist at the Colony Group. Rich, always good to see you. Thanks for joining us tonight.
You too, Bill.
And before we get to your stock picks, I want to pursue this. I've always thought of you as a savvy value investor through the years, but it sounds like growth is your strategy for 2020. Is that the case?
I think when we're looking at names that are going into next year, we're finding some mispriced growth names that we would call GARPy, growth at a reasonable price. Mm-hmm. So I think we're finding names, two of which are GARPy, and one is a value name that we think will turn back into a growth name once things work themselves out. Okay, so you haven't completely given up on value. Let's look at these three companies here. There's Booking Holdings, the old Priceline, and if there's ever a company that needs to split its stock, this is it here. Why do you like this one here? Yeah, they own Kayak. They also own Open Table. It's a play on international travel, which is about 50% of sales. The consumer sticking around in what we call alternative accommodations or holiday rentals. We think this business is a really strong business. It's well managed. Over the last 10 years, this company has returned shareholders at 25% annualized CAGR. And we think the stock has another 28% upside to the 25.70-ish level. It's a big price name, but I think it's a name that should be in people's stockings.
Then CVS, we've talked about this one again recently. This is a company, obviously, that wants to be on the vanguard of refiguring the healthcare industry. We're showing you a one-year chart. It's had a pretty good year, but for the last 3 or 4 years, this has gone lower. It's been trending downward. Why do you think this is a growth stock for next year?
Yeah, this is the value, hopefully turn growth. Mm-hmm. So we think that the Aetna purchase is transformative, and we think that the market has mispriced Amazon's risk into the pharmacy business. The stock, we think, could trade at least to 94. It's trading at 10 times earnings, so it's got a value play on it, and it, as you said, it hasn't had a big move over the years, and this may be the year for CVS next year. So you have mid-20s upside to this name. All
right. Finally, a company I was not familiar with. It's had an interesting business model, John Bean Technologies in food processing and air transport.
Yeah, think slicers and packaging and loading planes and de-icing planes. Two separate businesses. Right. They've been, but think also about ready-to-make foods and food delivery, and that's the business that they make the equipment for. The stock is, we think, cheap based on its future growth, and the food processing business in particular is very fragmented, so they have a strong M&A culture, almost like a mini Danaher. So we think that this is an exciting stock. It could trade into the mid-150s next year, okay, which would have big upside.
Very good. Richard Steinberg with the Colony Group. Happy New Year. Good to see you. Thanks.
Happy New Year. Merry Christmas, Bill. Always great to be on this other side of the camera with you.
Thank you very much, Rich.